Hi everyone. Home Depot reported first quarter 2023 earnings results. So in this video, I was going to review Home Depot's financial figures from those earnings release. Also, I was going to update my buy recommendation on Home Depot stock. Of course, Home Depot is right now one of my top 17 stocks to buy going into these earnings. So after, did I change that recommendation? You're going to want to tune in to find out. So let's start with the earnings review first. Revenue decreased by 4.2% year over year to 37.3 billion. Remember, Home Depot benefited tremendously from the COVID-19 pandemic, unintentionally, of course, because people staying at home decided that home improvement was something that was worthwhile, and people took on a lot of projects during that time. Revenue profits boomed for Home Depot, and finally, revenue decreased. Investors were waiting for a revenue shortfall from Home Depot for a long time now since economies reopened, and finally, Home Depot did actually experience a revenue decrease. Earnings per share of $3.82 was down from $4.09 in the same quarter the prior year. Customer transactions decreased by 4.8% from the same quarter last year, and the average ticket price increased by 0.2% to $91.92. In other words, customers were visiting Home Depot less often, but when they did visit Home Depot, they spent roughly the same amount of money. Cash flow from operations improved to 5.6 billion. That was up from 3.8 billion year over year. But the figure is not as good as it looks. The big change was just working down inventory that it had boosted up at the same time last year. So think of it like last year, their cash flow from operations were lower because Home Depot spent a lot of money bringing in inventory sooner than it needed it, because remember, there was a lot of supply chain shortages and Home Depot didn't want to be left with empty shelves, so they purchased a lot of inventory in this same quarter last year. This quarter they did not do that. They just sold through the inventory that they had built up. And so the difference between that inventory balance is what made the cash flow from operations look better than it actually was. It wasn't bad, it just wasn't as good as it looks in this report here. It didn't The company's performance didn't improve by nearly 50%, as you could see from the revenue decrease and the earnings decrease. So the disappointing results this quarter was primarily driven by lumber deflation and poor weather in California. Let me talk a little bit more about each of those. So Home Depot has a policy of getting ahead of deflation. What that means is when commodity prices decrease, Home Depot lowers prices of its products quickly. So as soon as Home Depot noticed that lumber prices were falling, Home Depot lowered prices on the inventory on its shelves quickly. So for that reason, people were buying lumber at lower prices, and so that caused sales to decrease, right? Because if you're buying the same amount of lumber, but now prices are much lower, you're just spending less money because you're paying a lower price per uh, 1,000 board feet that you're buying. And then secondly, weather was really bad in California in the first quarter. There was record amounts of rain and snow in the region, and the colder than expected weather certainly put a damper on some construction projects. Some projects were delayed, some were paused, some were canceled altogether because of all of there was record amounts of rain. So some of that Home Depot might recover here in the second quarter, right? Some projects you can't cancel, you could only pause, you could only delay it. Eventually, you have to complete them. So, those projects that were put on pause in the first quarter, they could be completed in the second quarter, which could be a boom for Home Depot in the second quarter. Regardless, management lowered their expectations for the full year to a sales decrease of 3.5% and an earnings decline of 10%, both at the midpoint. I was a bit surprised that the stock price is only down a percent and a half as of this recording on the day of the release. I thought with a quarter like this, with the revenue decrease and the lowered expectations for the full year, I thought the stock would be down 3, 4, maybe 5%. So I'm a bit surprised it's not down more. Maybe over the next coming days it will decrease a bit further. Nevertheless, to answer the question, is Home Depot still a buy in my book, in my recommendation? I didn't see enough in this quarter to change my recommendation. I still think Home Depot stock is a buy. I was already expecting a slowdown in sales and profits this year due to the factors that I mentioned. They experienced a boom in the pandemic. Eventually, that had to decelerate. So I was already expecting that. Not a surprise to me. So I still rate Home Depot stock as a buy even after these earnings results. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.